All right, trade pros, good morning and welcome to our morning market update for Thursday, October the 18th of 2018. This is George Papazov from Trade Pro Academy. Hope you're all having a great day today. We have an awesome morning market update ahead. We're going to talk about a few things, including initial jobless claims, the Federal Reserve meeting minutes yesterday at 2 p.m., why they were important, the U.S. Treasury, and Facebook. So we have a lot to cover. Let's jump right into it. Equities here are starting the session in Asia on a very bearish note. Japan's down 0.8%. Hong Kong's flat. China, however, down 2.9%. China's getting absolutely obliterated in today's session. India's closed for holidays. All right. In Europe at midday, London's flat. Paris is up 0.4%. Frankfurt's up 0.3%. And the United States, Dow's down 0.2, S&P's down 0.3, Nasdaq's down 0.3 as well. So we're seeing a little bit of bearish pressure, but over the last few days, the bullish sentiment has really helped gain a little bit more confidence in this market. So this morning, it's interesting to note, crude oil is down 1%. We are going to be switching futures contract to the December because the Novembers expire October 22nd. That's just how crude is. All right, that's just one of the many weird things about trading crude oil. One very small thing of that is the contracts expire the month before that are labeled the following month. So November is going to be expiring next Tuesday. Therefore, we're rolling over now to December. How do you know when to roll over contracts? When the next month has more volume than the prior. And right now, crude oil on the Z, December's got 170,000, November's got 76,000. Which one do you want to trade? All right. Initial jobless claims this morning at 8:30 came out at 210,000 versus 212 expected, slightly lower, which is a good thing. Less people filing for unemployment. The 4-week average, however, jumps up by 2,000 jobs to 211,000. Prior initial claims revised slightly higher, which is a little bit of a bearish note. Continuing claims, however, lower. So this report, for the most part, confirms one thing. The labor market in the U.S. is really good. Not that many more people filed for unemployment. These are low numbers to begin with. All right, so that's good. It's a pretty good thing. Philadelphia Business Outlook, that's their Philly Fed Outlook survey. It came out at 22 versus 20 expected, so pretty bullish. New orders were down, inventories were down, prices paid were down, which is good. Employment, however, was higher. That's a positive thing. And 6-month business conditions actually dropped a little bit. Capital expenditure index dropped a little bit as well. So gain in the headline number, but when you look at the constituents, it's more of an number. It's not that great. It's not that bad. 9 a.m. we have Fed's Bullard speaking on monetary and economic policy. 10 a.m. leading indicators. 10:30 natural gas inventory scheduled for today. We have money supply in the Fed balance sheet at 4:30 p.m. Eastern. We have a few economic updates, and that should give us some opportunity throughout the day. All right, why are the U.S. futures down a little bit today? Why did they sell off yesterday? Yesterday at around 2:30, when the 2 p.m. rather, when the statement was released, the meeting minutes. Remember, this is the 25th to the 26th meeting of September. We finally found the meeting minutes today, or yesterday rather, for that meeting. So when the Fed hiked for the 8th time in a row since 2016, not in a row, 7 were in a row. That other 8th one wasn't. It was in 2016. But anywho, when they hiked for the 8th time in just 2 years, the Fed, what was the logic behind it? What was the discussion that took place between the Federal Reserve voting members? That's what we got to see yesterday. That's why it was so important. I signed into the elite room around 1:55 p.m. Provided a good overview. Excuse me, guys. And so anyways, point I made there is this: it was a bearish report. It was very hawkish, meaning that they're going to intend to raise rates more for a longer period of time. Therefore, it was going to lead to spill in equities. And we got that spill in equities. Great trading opportunity for the members in our room. Hopefully you guys capitalized on it. All right, as investors kind of digested these meetings, a few things were said that were rather hawkish. It showed that the Federal Reserve sees themselves going above a neutral rate. What is a neutral rate? A neutral rate is a rate at which the current market conditions support. So let's say that rate's 3% in the Federal Reserve's mind. Then when you get 3% because the market supports that rate, you stop hiking. However, the Federal Reserve has said that they're going to hike more than that. There's a few members on the panel, the voting members, who want to see hikes go above the neutral and normal rate of the Federal Reserve. That's hawkish. That's a tone that we've been wondering. A lot of traders and investors wondering, will the Fed hike more when they hit the neutral rate or not? We don't even know what the neutral rate is to begin with. But when we do get there, will they hike more? And there's indication that yes, they will. And Jerome Powell supports that narrative the most. In fact, he said in the last Q&A, what would be a very hawkish sign for the Fed? And he said inflation. Two things you need to follow are jobs numbers. Any report that talks about jobs is a great report to follow. Market will be looking at it very closely because it's an indication of potential future hikes, and also inflation. Those are your two things that you need to watch. You want to know what the Fed's thinking, you got to follow those two things, and you'll be on the right side of the trade. All right. Here's an interesting part. A few participants expected that policy would need to become modestly restrictive for a time, and a number judged that it would be necessary to temporarily raise the federal funds rate above their assessments of its longer run level. Just basically means when we get to neutral, we're going to go higher. All right. There's also concerns that the Federal Reserve was worried about asset bubbles, hence being S&P 500 being overvalued. I mean, they're talking about the market, and that's interesting. So that was a hawkish statement, led to a sell-off in equities. I don't think we panic, but we could open up the downside a little bit more today. All right, the U.S. Treasury this morning passed up a formal opportunity to label China a currency manipulator. They do a semi-annual report that labels certain countries currency manipulators. Interesting fact, if you devalue your currency through action, you are a currency manipulator. If you hike or make your currency stronger, you're not a currency manipulator. The report only looks at people who devalue, which I think is wrong. And you know what? I was trying not to do this. On Monday morning at 9 a.m., we have an article coming out. That's the China trade war and why the United States needs China to have a deficit. Or a surplus, rather, a trade surplus. And I'm sick and tired of watching this media and you guys being misinformed about this stuff. The United States needs China to have a surplus. The United States needs $400 billion worth of cheaper goods to import to its consumers. And there's a reason that China needs to be doing what it's doing. It's not suddenly you wake up and, oh my gosh, China is taking advantage of us. It's a relationship that was formed on the ground of China taking advantage in this respect, but they actually pass on the benefit of this to funding the U.S. Treasury. And I talk about that in the article. It's going to open your eyes, and you're going to understand why this is such a huge deal. This trade war, if the 25% tariffs get kicked into force on $500 billion worth of goods, will almost absolutely, definitely 100% cause a global recession. That's how deep this thing goes. It's not just, oh, yeah, you guys are taking advantage of us. There's a relationship that was established based on these principles. The one thing that China is doing is devaluing the yuan. All right, the yuan's been devalued quite significantly, and it's not purposely. All right, the other option would be, how do you get your currency to go up? Sell U.S. dollars. That's going to kill the U.S. dollar rate. All right. Also, they're going to have to sell treasuries from the U.S. The U.S. is in a budget deficit. They're trying to pay their bills and they can't. They're going to need to fundraise more money if China gets out. You don't want the yuan to be higher. It would damage a lot of the United States if the yuan was to float higher. And I don't think a lot of people realize that. I don't think they realize the actual relationship underlying this trade war. And when you call it a trade war, it forces you to take a side. And that's the one of the most dangerous things that you could do, is to divide a people, all right, to be divisive and say, take a side, China versus U.S. It's not. It's China and U.S., and they've been working together for a long time. They need each other more than you believe. What Donald Trump is doing is trying to gather his supporters to help him negotiate with China. All he wants to do is renegotiate a trade deal, which is fine, but he's going about it in a very aggressive way that has massive consequences. I got that article queued up for 7 in the morning at Monday on our blog, tradeproacademy.com/blog. You just click the blog button. It'll be an eye-opener, a mind-blowing one for most. All right. So anyways, the U.S. Treasury has not labeled them a currency manipulator. No matter what anyone says, that right there is the proof in the pudding. If they're really devaluing their currency so much, why don't you go ahead and label them a currency manipulator on your report? Why not, U.S. Treasury? You haven't had a chance to do that. You had the chance to do it today. You didn't do it. What did China do? I don't agree with this either from China's behalf. The U.S. Treasury releases a semi-annual report, says China is not a currency manipulator. What does China do? Manipulates their currency right after that report and drops the yuan the most in 2 months. That's not a smart move either. But look at China. China's down over 20%. Nobody knows that. Nobody following Western media that doesn't care about knowing the full picture knows that. They don't know that China's down now 25%, officially in a bear market. They're in a liquidity crunch, and their economy is about to collapse. If that economy collapses, get ready to pay more money for the goods that you buy in the United States. All right. More money being paid for goods means you just got a salary cut, and you haven't got a hike since 30 years ago from a inflation adjusted median income. So these things are a lot more complex than the surface leads on to be. I'm just saying, be very careful. This trade war is intensifying, and it'll get uglier as China does worse. And their markets right now down 3% in one day, down over 20% so far this year. They're in a bear market. Be cautious. Watch this stuff. It's disappeared off the tape. You don't see as many news about it, but it's getting heated, and it's getting worse. And China's getting in a very desperate situation where it may actually sell U.S. Treasuries. In fact, they've already sold $5 billion worth of U.S. Treasuries. So you can see they're starting to feel the pinch. Okay, we'll leave that argument. I feel very heated about this. I feel like I need to inform you. It's not an us against them type of mentality you should have. It's a us and them. How do we make it work better? That's the only way you get to negotiation ground. Facebook, let's leave it there. Facebook, institutional investors are trying to sue Mark Zuckerberg. Not sue, but a couple of institutional large ownership percentage interest in the Facebook stock is trying to remove Mark Zuckerberg from his chairman post. All right. To remove Mark Zuckerberg from his chairmancy would mean that they would put an independent board. All right. Right now, Mark Zuckerberg controls everything in the company. They would put an independent board to be able to steer the CEO and the company in different directions. And they're saying it's based on the mishandling of these privacy breaches, and the last 2 privacy breaches in under 1 year. They're trying to remove them. When this breach happened, I think I told you guys, shareholders are going to be calling for Mark Zuckerberg's head to roll on this news. And I said it, and it took a few months. There it is. Institutional investors are not happy. They want him removed. However, they're not going to be able to do that. Here's the genius of what Mark Zuckerberg did. Everyone that owns Facebook has a vote, right? You could vote as a shareholder, but your vote doesn't count for squat, because at the end of the day, Mark Zuckerberg owns Class A shares, which give him a 10-to-1 voting ratio over your shares. Every 10 of you that vote for something that happened, Mark Zuckerberg's 1 share will overturn it. Now, how many percent does he own of this 10-to-1 ownership structure? Get this, over 70% of Class A shares are owned by Mark Zuckerberg. He's not going anywhere. Ain't no one touching Mark Zuckerberg. He's safe. Unless you legally do something, then that's a whole different procedure. And I don't think there's legal grounds to remove him. Shareholders might be upset. That's what you get for buying Facebook. You get a leader you can't do anything about. And that's part of the deal that you got when you bought Facebook shares. So there you go. There's our morning market update. Remember, Monday morning, we have a great report on this China trade war with the U.S., what the situation really is, the real truth about it. I'd say 99.9% of people are totally missing, like just right over their head. And it's a dangerous thing to have an opinion that's founded on just somebody else's opinion, right? You got to have opinion that's founded on fact. And trading markets is the same way. You might wake up and say, I think this thing should go higher. Who cares what you think? It's what the market is doing that matters. And that's the kind of tone that we have to take with trading. And why am I so passionate about this China thing is because if you're not understanding it, you're not doing the trade based on your understanding. You're doing it based on opinion. All right, we're going to get some fact in there on Monday, and I'll show you why this relationship is a lot more complex than you would ever think. I'm not saying what they're doing is right, but I'm also saying that what they're doing isn't that wrong considering the history and the agreement and arrangement that they've gotten between. All right, so anywho, well, it's not a time to divide, it's a time to collide and work together. That's kind of my philosophy. A little cheesy, a little corny. Today's markets look a little bit bullish to start. We're going to see how much further we can take that bullish momentum. We're at a very key level. So early morning yesterday, I told you to buy dips and look for some forward momentum to the upside. We got that. We got a pretty good rally. Today, I'm a little bit less confident about either direction. So what that means is you're going to have to come to the trading room, spend 10 minutes with us, and we're going to tell you where the momentum is. The first 10 minutes, if you watch it closely and know what you're watching for, we'll tell you where the rest of the day is going. Thank you guys for tuning in. Have yourself a great day. Hope you enjoyed today's morning market update. If you did, like it, That's what YouTube made the button for. I appreciate you guys so much. I'll see you tomorrow morning at 9 a.m. to wrap up the week. Thanks so much. Take care. Have a great day. Manage your risk and trade like a trade pro. Goodbye. Guys, I got 12 hours of sleep last night, so get ready for me to annoy you all day. I got energy. I have coffee. I'm really going to upset you. From 06 down to 01, so S&P just saw a little bit of a sell-off as I turned my back to it. Oil prices are pretty weak. Today we're rolling over to the November or the December contract. So CLEX, thank you so much. You've made me a ton of money. Now it's time for the Z to do the same. So we're rolling through to the Z contract. CLEZ 18 is the one that we'll be trading today and going forward. Let me give you some key levels here for the S&P 500 and what trades you could expect early on. Some high probability, low risk opportunities. There's 2 levels I'm watching for. And then we'll go to Steven to talk about oil.